We are live, 30 minutes late, but we got there eventually. Apologies, team, for the technical difficulties. I saw a comment as I was trying to track through the live comments on the way here, and people going on about like the internet being in lockdown, and you guys were ripping me out, and I couldn't reply. Not a good situation to be in, but team margin of Shavety is together. How's everyone going?
Great.
Good. Finally being able to show our most, no?
Yeah, how's everyone progressing?
Well, look, I'm not the greatest at growing facial hair, but
I'm with Hamish.
I've come prepared. All right.
Oh, look at that.
Look at that.
You might see this in the next stream,
Look at that.
and we're all just gonna pretend that it's real. Okay.
Yeah.
You definitely have to put those
absolutely.
on towards the end of the month, and no one will say anything.
Exactly. Yeah. Exactly right. Yeah.
Can you send one of those to me, Hamish? I probably need it too.
Brandon,
Oh,
looks like you're
everyone
growing out
else
your
is,
hair for November as well.
Yeah, I am. I got the beach vibes going. Sorry, I'm in DJ mode at the moment. I'm just spinning the decks here, playing some
Very
tunes.
nice.
Yeah. Yeah. I
All
can
right,
do this.
we'll. Oh yeah, that works. Just tape that down.
Nice.
All right, let's get into this thing. We've still got a few people in here after our big delay. Hopefully, have a few more show up. But look, I'll briefly talk through, I guess, why we're all doing this stream in the first place, and I'll introduce everyone. I'm sure the people watching know most of the people in here already, but let's talk through that, and I will just share a screen. Hopefully that's coming through for everyone. So this is the first and hopefully 4, potentially 5 live streams that we're planning on doing. We've got a good team together, team margin of Shavety, raising money for the great cause that is Movember. I'm sure some of you guys have heard the story before, but I did Movember solo last year. I think raised a little under $2,000, and we've almost surpassed that already in like the first week, just with the bigger team now, which is fantastic. So we did have 12 of us. We actually had John as a late entry just today, so the team's now up to lucky 13, which is fantastic. Nice. And raising money for a great cause. So if you don't know already, Movember is raising money for men's mental health, suicide prevention, and also the 2 male-only cancers, prostate and testicular cancer. So started in Australia with a couple of mates having a beer, which is kind of Australian tradition, and now it's grown exponentially. So it's fantastic to be involved with that.
Yeah. It's
you guys
it's
done
definitely
Movember?
Sorry,
Go
I was
ahead,
just going to
Hamish.
say it's definitely the kind of cause that we're all kind of touched by it in some way. I think most of us know somebody who everyone knows people who have struggled with mental health. Maybe you know someone who is taken their own life or something like that. So I think it's a really good cause to get behind, and I'm glad to be a part of it today.
Yeah,
And especially when you see there's already, I think we are close to $1 billion. Either we surpassed it last year or this year. So it's just amazing to see how much effort and how much an organization can do when they just when they grow it here and do good things.
Mm-hmm. Yeah, absolutely. And we haven't got this question yet, Michael, but did you really shave on the 1st of November? That's a fair mo coming along in a week's time.
I did. I promise. On the tracking app in the November, the
evidence is
picture,
there.
Yeah, it is. No,
I don't believe it.
Very nice.
I think I saw
well,
sorry.
Go ahead, Neil.
Oh no, Michael, I think I saw your picture on maybe day 3 and you were like pointing. I was like, holy heck, he's already like grown a mo.
It is insane. It makes me slightly embarrassed. Can you guys see anything on my top lip just from the crappy cat? No, exactly. Yeah.
Maybe a shadow. Same with me.
Yeah.
let me get my glasses.
Yeah, exactly.
There you go.
Hey, there it is.
There it is.
There it is.
Somebody screenshot that.
It's incredible. Like if I grew a great mo, it would be so awesome because it's just so ginger. It would just be pure ginger right across there. It would be glorious. Unfortunately, this is about the length that it gets.
Yeah, I won't
well,
be shaking mine out for a
gotta
few
make do.
weeks.
That's what it is. All right. Well, I'm going to do a quick round table for introductions for everyone, or I'll introduce everyone. Everyone knows Brandon and Hamish already, so we'll skip over those guys. Brandon from New Money, Hamish from the Hamish Otter YouTube channel. Well, that was impressive, Brandon.
Very feminine for this
we've
Movember
got,
stream.
yeah, it is, but that's all right. We need Mo sisters as well as Mo bros. No judgment here. We also have Andrew Brown from the Andrew Brown YouTube channel, Michael Schmidt from the Michael Schmidt YouTube channel. We have Neil from the Adventurous Investor, Taylor Watts from Watts Investing, and myself, Tom, from Investing with Tom. So that is our very brief introductions. Channel links, if you want to go and check out Brandon's hair or anything, or any of the other channels, will be in the description below. And the Movember link is there as well. So if you want to donate to Team Margin of Safety, you're more than welcome to do so. So fire away with any questions in the comment section. And I think we'll just basically take questions for maybe an hour or so and just see where this thing goes. We don't have much of a plan, as people can probably tell. So throw us your questions and let's get into it.
And if people are wondering where the rest of the team is, so we have split into 2 teams for those live streams. No, next week I think is scheduled to be for the second team or second part of the team.
Yeah, that's right. So this is more or less Team Australia and New Zealand. We'll keep calling Andrew Australian, but he's in a distant part of the world at the moment from New Zealand and Australia. And next week we'll have, I think, almost entirely, I guess I'll be hosting, but almost entirely a US team will be coming on the live stream next week. So
Nice.
Very cool. Yeah,
Nice.
Should be good. Rightio, let's get into some questions. Did anyone watch the Proprietary Talk at Boston College where he discusses Tencent at length? Very cool. I'm seeing a few nodding heads there already. China in general, Alibaba, Tencent have been like crazy hot topics. You guys seen this at all?
No.
Neil,
I
you're
think we
nodding.
have
Take
already
it away.
the first responses from people. No? I saw Neil posted something and left some comments.
Yes, no, it was a fantastic talk. He broke down Tencent into a very easy to understand basic framework of Tencent. Basically, broke it down into 2 different business models, essentially. And he loves the bazooka analogy, where he talks about the bazookas that they're firing off in different departments. It was definitely, if you have not seen it and you're interested in Tencent, I would 100% recommend checking it out. It's around the 40-minute mark on the first video that only come out maybe 4 days ago possibly. It's definitely worth spending your time and checking that out if you're interested in Tencent.
Yeah.
And
I
I
think
think
he released a couple. Sorry,
You guys go.
I was just going to say,
Okay.
yeah, he released a couple just in the last couple of. You go.
Yeah, sorry, Hamish. I was just going to add that if anyone's read the book The Outsiders, I don't know whether you have, but there is a strong correlation between Pony Ma and every criteria in The Outsiders book from Will Thorndike. So I think that's an interesting connection. Monish Rabai kind of highlighted a lot of it, and it kind of, I think that was really interesting from my side of things to see the correlation between those 2 kind of resources that I've read in the last year. It's like Tony Ma has just read The Outsiders and copied it, essentially. That's how I see it.
Andrew, you sound terrible, but I got most of that.
Outsiders is a good book, though.
Outsiders is great. Yeah, sorry, you go, Hamish. What were you going to tell us?
No. All I was going to say was, yeah, I think he released Monish 2 new ones this week, which was
Yeah, I watched the other one.
surprising. He went quiet for a little while, and then I think I watched the other one as well. So yeah, unfortunately, but yeah, I don't know. I'm not super interested in Tencent as a business, so whenever Monish is, and same with Alibaba actually, to be honest, and so whenever Monish is talking about them, I kind of gleam over those parts typically, unfortunately. But yeah,
has anyone gone deep on Tencent? I haven't really. I've done a bit of DD on Alibaba, but they're kind of the 2 stocks that Monish is always talking about, right? When it comes to China,
Yeah.
it's Tencent or Alibaba, and it seems like he likes both of them quite a bit. Obviously, he holds Alibaba. Does he hold Tencent?
Mhm.
I don't think he holds Tencent, does he?
Well, it's not in his 13F, but I'm pretty convinced he owns it through either Naspers or Process.
Oh,
So
okay.
if anyone's not familiar with them, so Naspers is actually the company that he mentioned in that talk as well. So they invested, I think it was $30 million into Tencent in like the early 2000s, and they've ridden that to like hundreds of $billions in value now with that single investment, and have barely sold any. So it's like this weird, I think they're a South African newspaper company initially, and now
Crazy.
they make up like 20 or 30% of the entire South African market value of that index, which is kind of
Largest
crazy.
company there
But,
by far.
yeah,
Really?
and
Wow.
like, yeah, I think it's like 80% of their value roughly is just their Tencent stake. It may even be more than that. And if you run some sort of like net asset value numbers, you can buy Tencent potentially at quite a big discount through that sort of Naspers holding company. Whether or not that value gap
Right.
ever closes is like the big question everyone's trying to answer. But that's an interesting approach, and that wouldn't show up on a 13F.
But really interesting also with the when you then get into that process detailed. So Process is a company listed in Netherlands, and Tom, you have talked about with the After Dinner Investor about it in quite length. But when you look at that company, which is then again majority shareholder is the South African company, so it's basically a split off, and they have moved those Tencent shares into Process, and Process is actually owning a lot of internet companies in Europe. In all different types of sectors, if it's food delivery, if it's electronic payments. And so when you look at that portfolio, it actually looks like a massive startup venture capital firm, but with the bonus that you have Tencent that is massively undervalued in their portfolio. You actually have a relatively stable, a potential stable investment with the potential upside because there are a lot of young companies that can grow into new markets. So certainly really interesting, but it's obviously a strange construct between them, no? And especially they are now buying back shares from each other, if I get that right. And so it's kind of...
there was some sort of share swap arrangement. I don't know the details. I'm not sure if Andrew or Neil do.
I'm going to try to speak again. Can you guys hear me a bit better now?
Yep.
Yeah, sweet. Yeah, cool. So I've done a fair bit of work on this one actually. So the Naspers discount at the moment, guys, if anyone's interested, is about 55% discount to the underlying Tencent valuation, and that's just, you don't have to. You can go and obviously check the Tencent stock price to see the accurate valuation of Tencent. So you're getting a 55% discount on that. Processes are nearly 40% now. So the difference between the 55%. Oh, just hold on. The airport is obviously speaking to me at the same time.
Last call
Paging
for
Andrew.
got 10 minutes, I think. But anyway, the discount's pretty dramatic, and the big discount I see is because Process can grow into the Amsterdam Stock Exchange, whereas the ceiling in Naspers, because it takes up so much of the stock exchange in Joburg, is seriously limiting its ability to close that discount. But Process has a better chance, I think.
Interesting.
Taylor, is this something you've looked into, or are you open to these
Not
kind of
at all. I'm
complicated situations?
just listening, being a
Just trying to
bystander.
get that dividend income.
Taking notes.
Yeah, I spend most of my time looking at Tesla and American stocks currently, and because Tesla's almost half of my portfolio now. So just
is it
that
at cost, or just because it's gone up so much, or a combination?
Yeah, a bit of a combination. I haven't got the exact percentages based on cost, but I think my cost basis is about 450, and now it's at 1,200 and something. So a bit of it will be the increase in price, obviously.
Yeah, nice. Brandon's over there keeping his cost basis very quiet.
Oh, yeah.
Everyone, did
Yeah.
everyone
I'll have a
see,
Yeah.
did
I'll have
everyone
a
see
look.
Elon's tweet just a few
Yeah.
hours ago about
Yeah, vote on whether he sells
selling?
shares. It's
Yeah,
crazy.
well, the vote.
Most
Yeah,
people
so
want
for
him to
those
sell
who are
it
not
at this point, right?
True.
What's that, sorry?
I think most people are wanting him to sell it with the current stats of the poll I saw.
Yeah, so for those who haven't seen that, he made a poll for, I guess, people who are upset that he's not paying that much personal income tax relative, if you compare that relative to his massive wealth, it's a very, very small percentage. So he's doing this Twitter poll, basically letting Twitter decide if he'll sell, what is it? Was it 10% of his?
Yeah.
Yeah.
Yeah,
It's got to
about
be $20
24
billion or
billion.
something.
It's $20 billion worth of Tesla stock. So that'll be interesting to see what happens to Tesla stock tonight.
Yeah. Well, I think he did the poll
not
to
tonight,
like
tomorrow night.
shape the emotions to say he's not selling it for any other reason.
Mm.
And he's making it more on other people's hands.
Yeah. That's
Yeah.
the tactic.
That's
Yeah.
interesting. Yeah.
I think it's always when obviously someone is in the spotlight, like Elon with Tesla now, and obviously gained so much money. I think there are actually a couple of different debates going on. What he should do with all that money, and that he should try to, I don't know, rescue the world from hunger, basically. So I think it was a newspaper guy who actually wrote something about, hey, you can actually solve that people are starving on this earth, with all your money, and everything will be happy. And he actually responded as well. I was like, yeah, I would do that if you give me a plan. And now the same there with tax. I think it's obviously also other people in US that have a lot of income, potentially paying less tax, but obviously it's all in their regulations. Same here. If we don't sell our stocks, then we don't have to pay tax, right? And they are just holding on, obviously, which is a fair thing to do.
Saw a funny follow up to that. How they're like, "Hey, Elon, you could solve world hunger, by the way." And then someone was just like, "The US printed like $4 trillion last year. It's kind of weird that world hunger still exists, eh?"
Interesting.
All right, we've. Sorry, Michael, go ahead.
What brings more publicity, no? So when you put Elon Musk in a spot and say you can do that,
yeah, no, absolutely.
His fault.
It's you're evil.
But yeah.
All right, guys, we have a super chat, $2.99 from Garp Investor. Thank you, Garp Investor.
Thank you.
Just so everyone knows, I'm going to be donating all the ad revenue from the weekly live streams and everything to Movember. So super chats are appreciated. I will say, I don't know the exact percentages off the top of my head, but YouTube does take a small cut of super chat revenue. So if you want to be more efficient in your donations, feel free to go straight to the Movember site, which is in the description as well. So, but appreciate the super chat nonetheless. Have any of you guys actually made any money cloning Monish Prabrai? I know there's a few people in the chat that have already responded to this. I see After Dinner Investor. I know people have done quite well on Micron. Fiat Chrysler, most people did well, but I was far too late to the party with that. I don't know what your guys' experiences are in that department.
Anyone?
No shameless cloners in the room?
No. I'm getting ready to make some money from cloning Monish Prabrai. I'm waiting.
Yeah, I'm waiting too. I've got shit.
Yeah.
I've got shit in
I think
my
we're all
portfolio, and we're waiting.
I think I was just lucky with my timing into Alibaba, because I just waited and waited, and yeah.
Well played.
Even still, I think it's come back down
But
recently.
yeah, it got down again,
Yeah.
and who knows? Maybe it goes down to 100, and I think it still would be fine, because I'm not looking what happens in the next 12 months, right? And if you see it, when you see how strong the company is growing, the stock price has to catch up at some point, right? We just don't know when, and that's fine. But yeah.
And Tom, what was
assuming-
Munga's original buy-in for? I remember you were telling me this. What was his kind of price range that he started at?
Well, it's a bit hard to tell exactly, because you just get the quarter that he purchased in, but I don't know, at a guess, maybe 250 a share or an ADR.
It's crazy.
And then he averaged down what must be in the third quarter, I suppose. And again, don't know when exactly, but certainly under $200 a share, maybe as low as 150, but we don't quite know.
Yeah. No, I don't mind seeing it go south. Don't mind it.
Yeah, the big things with Alibaba for me, like Michael said, obviously the underlying business is doing very well. It's the real questions for me are they just going to pledge or donate or whatever, give away all of their cash flow forever? That's quite an important question to answer. And are foreigners going to be allowed to own the business long term? Like you're in this VIE structure, which isn't really new, but it's kind of come to light again with all these regulatory crackdowns and so on. Those are the two big questions in my mind, but I don't think there's any question that the business is very strong and going to grow for a long time. It's whether there's things that'll come out of left field, or maybe they're not left field things anymore, but whether there's things that can ruin that investment.
Guys, I'm boarding my plane, so I'll have to catch you on the next one. Okay.
Good flight. Appreciate it, Andrew.
Nice to meet you.
See you
Catch
guys
you later.
Catch you later.
Cheers, mate. Have a good flight.
Bye.
So how are people buying Alibaba, through the ADR structure or on Hong Kong?
ADR personally, and I mean, I guess we can't see who's buying in Hong Kong out of the super investors, but there's a long list of US investors just buying the US stock straight up.
Yeah.
Pabrai, Munger, Bill Miller.
So I'm buying in Hong Kong. However, I don't think it will be a big difference, because if for whatever reason in the future the ADR structure will be not allowed anymore, or Alibaba cannot be listed in US anymore, it will obviously have a massive impact on the share price, right? And that's why I think it wouldn't matter that much. But yeah,
there wouldn't be any escape in that one.
No.
Yeah, well, I mean, there's sort of two things. There's the ADR, and then there's the VIE structure. So the ADRs aren't a particularly new thing. I mean, that's just a way of investment banks sponsoring US investors to be able to buy into foreign companies in US dollar terms and get paid dividends in US dollars. And the investment bank collects a small fee on that process every year. I think you can look this stuff up, but with Alibaba, it might be like 2 cents a share a year or something, some very small fee. But then there's the whole VIE structure, and I'm pretty sure the Hong Kong listing still falls into the VIE, where you're technically purchasing this Cayman Islands entity. I don't think it quite gets you around that issue, but then you get rid of all the potential delisting, things that are going on. But yeah, if it delists from the US, I don't think that's particularly good for the Hong Kong listing either, like you say.
No.
Right, we got another super chat. Shout out to After Dinner Investor. We gave After Dinner Investor a shout out already, but he's paid us, so thank you. How often does Tom buy from QVC, weekly or daily? If anyone doesn't know, we talked about QVC as a interesting cigar butt style kind of stock idea on our Punch Card Investing live stream yesterday. I don't think I've ever bought off QVC in my life. I don't know about you guys. I'm probably 30 years too young at least to do that. Yeah, see.
No, it's definitely not something I participate in.
I had a uni professor who was head of HR for QVC, and he was actually saying it's an amazing company. While it's as a viewer of the show and from the concept, you think it's how dodgy is this, and I've never personally purchased from there, and I don't know, I certainly still wouldn't do that. But he was saying company culture was great. The company was making profits, and they were just making money. So actually good business model. I've never looked into it as an investment, because I feel like I don't know, that the business model in general is not too good, but especially selling things then and pushing those products to people, what it feels like, and you don't really know if they're actually good or if they just make them look good. However, he was actually saying the quality of the products are actually generally good as well.
Yeah, it's a really interesting situation. Have any of you other guys, or have any of you come across QVC as an investment idea recently?
Can't say I have.
Okay. Yeah, if you're a Phil Town fan, you're not going to like it one bit. Like if you're looking for a business that's got 10% plus with the 4 growth rates and margin of safety calculator and all that fun stuff. But it's a really interesting kind of like special situation. If you're a Ben Graham, margin of safety, guy, then it's kind of interesting. Like the business, I think, still makes $600 or $700 million a year in per share terms. I think it trades at 3 times earnings, 4 times earnings, like $10 a share is the rough stock price. But it's got a crap ton of leverage in there. Like they've got so much debt. I think it was trading about $10 a share this time last year, and they returned $4.50 a share to shareholders. So you got 45% of your cash back out the gate if you bought it sort of last September. Part of that is a massive special dividend, and part of that as a like 7% preferred stock, which you could just obviously sell for cash if you want to. And they've just come out saying that they're going to pay another, I think, $1.25 special dividend. So at current prices, that's another 12% of your cash back. And I think they're going to buy back 10% of the shares outstanding this year on top of that. So it's some really interesting, like, let's just give a bunch of money back to shareholders as fast as possible and load the thing with debt, because we think this business probably isn't going to last a very long time. But, if it can still make money for 6 or 7 years and you're getting like 20+% of your capital back, or, conservatively every single year, that kind of turns into an interesting equation. But you've got to not be afraid of debt to get into that kind of stuff. What do you guys think about that?
It's interesting.
What sort of debt are we talking? Like Evergrande debt, or what sort of?
Oh, yeah. Yeah. So they're, I think, so After Dinner Investor actually did a video on this, I think, this morning. I want to say the enterprise value is about 12 billion and the market cap is like 3 billion. So, a lot of debt, what, 8-9 billion, something like that.
Yeah, that's what After Dinner's just come in the chat and said 8 bill.
Yeah, okay. So yeah, it's like levered 3 or 4 to 1 or something. And they're about to pay out a bunch more of the equity as a special dividend, so it's going to get more leveraged pretty shortly. So yeah, there's a lot of debt. I think the operating income covers their interest payments about 3 times over at the moment. But yeah. Hamish, I know you're very debt averse, and this sounds like the opposite of a Hamish Hodder company. What do you think?
This is terrifying me.
Yeah. Hamish is sweating over there.
Yeah, you're young, make some risks.
Yeah. I mean, I would rather take a risk on, whether a business is going to grow and, expand internationally and become a larger business than one that just operates at higher leverage. I don't know. Like, I like to buy good businesses, when they're going through some kind of short-term event. And in a short-term event, if I'm going to be piling money into that investment, the only way I'm confidently doing that is if I know that they pretty much can't go bankrupt if they make, if they're losing money. So, like last year, looking at like Texas Roadhouse, for example, which is obviously one of my investments, no debt on the books. So it really doesn't matter how long they were closed for. Well, I mean, if they were closed for like 5 years, for example, then sure, they're in trouble. But, if they were shut down permanently for 12 months, 24 months, they've got a lot of room to work. Then other businesses that went into the pandemic with leverage just don't have. So yeah, I'm very risk averse when it comes to debt. I will say that.
Fair enough.
How
about the rest of you guys?
Oh, sorry.
Go ahead, Tim.
I like a bit of debt. Got a big student loan.
Nah, that doesn't count. Come on.
No, interest free. Love it.
Yeah,
nice.
Just keep it forever.
Good on you, Jacinda.
That's the plan.
Yeah, thanks, Auntie.
Good on you, Auntie.
All right, we got another super chat. Shout out to Harry. What percentage cash should you hold? Do we think there's a correction coming? Anyone care to speculate?
Cash is king, 100%.
Cash is trash.
Warren Buffett sitting on like 149 now billion, I think. I just saw.
Yeah, I think
it's
just came out,
it's insane, isn't it? Yeah.
So I mean, that's what he's doing.
But I think there you have to always put into perspective that he's running a insurance company. No?
Insurance
so
joint,
half
for
of
sure.
that probably has to stay in cash anyway.
Yeah.
Yeah.
I mean, on the second part of that, do we think there's a correction coming? I think we can all agree that nobody knows if there is going to be some
Next
correction
Tuesday,
forms
mate.
and-
Exactly. No.
next Tuesday, is it? Oh, sorry.
Yeah.
Oh, nice.
Yeah.
Pencil it down.
Yeah.
Yeah. Okay, there we go.
Leveraged
No,
inverse ETF 3 times bear. Yeah.
Yeah.
Here we go,
Yeah,
boys.
should I-
Next
Heads up.
Tuesday.
Yeah. Hamish, should I
Yeah.
be writing that down in pen or pencil?
Definitely pencil.
With the rubber really
No,
handy.
I think you should be careful. Well, I think you shouldn't be determining how much cash is in your portfolio based on a prediction about what the market is going to do. Historically, I mean, in my portfolio, the amount of cash is not an indication of whether I think there's a crash coming, but more of the investment opportunities that are available or not available during a period of time. So if there's a lot of opportunities, I tend to be investing a lot. And, last year, I think I was probably a little bit over 90% invested after April.
Nice.
Fast forward to today. And I mean, part of that's just kind of income related as well. It's a different story, but yeah, that's kind of how I've kind of managed that over time, is just, if there's investment opportunities, I go heavy. If there isn't, I'm happy to wait. And generally when there's a lack of good opportunities, it's been a good idea to have cash building up anyway.
Yeah, I've been
Yeah, you
doing it
raised a
much
good
the same way.
And that's like when people say, oh, why is Warren Buffett keeping so much money on the sidelines? Yes, it's partly obviously the insurance gig, but it's like he doesn't want to. Like, if he had investment opportunities, that he'd go for it. I mean, he's just following a strategy, and his strategy says, he follows the understanding, moat, management, margin of safety. And if you don't find anything that hits that criteria, then you don't just dump money into just crap. So naturally you just follow the strategy, and in times where everything's super expensive, naturally you accumulate more cash. And in times where everything's cheap, naturally, just through following that kind of strategy, you put more cash into the market. So yeah, I think exactly right what you're talking about, Hamish. You don't just you don't aim to, I'm keeping 50% cash on the sidelines because the market's going to crash or something like that. It's just a function of following a particular strategy. That's how I think about it.
Yeah, and I don't think you can also look to Buffett and say, well, he has a lot of cash, therefore I should too. I think the investment opportunities that are available to him are vastly different to us as smaller investors. But even between us, we have different areas that we understand in the market. So there will be certain times where, say, you understand Alibaba very well. I don't. So I'm not piling into it right now. But there are people who do understand it and think it's at a margin of safety below fair value. And maybe that means that they have an opportunity to invest more now than I do, right? So I don't think making comparisons like that really makes much sense. I think just kind of focus on what you understand and building your portfolio around that.
Yeah. I think Warren Buffett's time horizon's different to mine too.
Maybe just a little bit.
Yeah.
I find funny
But I
that those guys do have, those guys always, it's so funny that those guys just always invest with super long time horizons, and they're like mid-90s.
Yeah.
And I just love that. I love that about Charlie. How old's Charlie's? Like 96 or 97 or something crazy. And
around there.
he's like buying Alibaba for the next 20 years. He's like, mate.
But that's exactly what I wanted to comment on as well, because I think even though he's much older than you, Taylor, but I think he still is able to put himself into or disconnect from his age and say, I'm looking at the investment. And he's also talking about, I want to make sure that Berkshire Hathaway will continue to provide value for our investors in another decade. No? So I don't know. He really thinks long term, even though he might not be around. And that's also a fact. But yeah.
How many of...
Oh,
Did I cut out?
Yeah, what did you say, Brandon?
I said, how many of us own the A shares? Tom, I know you've got a few.
I went and got a few of the before shares were electronic, I got them to print out a few of the certificates. I've got them plastered all over my bedroom wall. You should see it.
Nice.
Put them in a safe, mate.
Yeah.
No, don't have any A shares. You can buy fractional A shares though if you really want to with
That's
with
true.
certain brokers.
$434,000. That's got to be. It's got to be like just in absolute terms the most expensive stock that exists, right?
Easily, you'd think.
I don't think there's anything that'd be more than
Yeah.
that.
I mean, is there anything over like $5,000?
Yeah, I can't. Really
I can't think of
I
any.
don't know. There might be a
Like-
shit coin on the market.
Yeah.
Yeah.
Get in now. 10 minutes later.
Billionaire.
Yeah, myself and Hamish were talking about that a couple of days ago. About that. What was that coin
Squid
called?
Game one.
Hamish?
The Squid Game one.
Oh,
Yeah.
that one.
What was that about? It went up. Like, I don't even know how these fake coins really work, but like people watching
Supply
the
and
market
demand.
cap go to several trillions of dollars or something, and then down to zero in 10 minutes or something like that.
Yeah, it reached. It had a market cap of $2.8 trillion, which is just about twice the GDP of Australia. So, you know, it was good value, of course. Yeah, if anyone hasn't seen that video of the trader who was watching the price live when it collapsed to zero in literally a second, it goes from 2.8 trillion to zero. It's hilarious. It's probably the funniest. I think I've watched that. I think I've probably watched it about 50 times over the last couple of days. Just
Can we
Jeez.
share
Funny.
the screen? I want to
Do
try
you
and
have?
find it.
Yeah. Share your screen and I can.
yeah,
I'll try
pull
and
it up.
find it.
Do you
You'll
do
be
you
able to
have
find
any
it pretty
idea?
easily.
Do you have any idea how much actual dollars were flowing in and out of that to move the? Was it just so thinly traded that like I don't know, a couple $100,000 were taken?
I don't know, but
what's going on?
I don't know exactly how much was going in, but the scam. So how these scam coins work is they'll obviously trade out and distribute a very small sliver of the total amount of coins that are available, and they'll hold all of the remaining coins, maybe 90% of them, so that you know they hold most of the market cap. And when the coin collapsed, there was 2 transactions that went through from the creator. I think one was like 2 million and one was like 3 million. So he made, they made, multiple millions of dollars from this scam coin just by dumping as much as possible. So I don't know if that gives any indication of what went in, but I mean, in that transaction, they were able to, make a few $1 million from selling a portion of their coin, which is kind of crazy.
Give it to us, Brendan.
Is this going to
I don't know
work?
if we'll
I
get-
don't even know if this is going to work.
Does the sound work?
Give it a nudge.
We need the sound.
No sound.
No,
I don't think
nothing
so.
coming.
No sound?
Send
Brandon,
me
you
the
just
link.
roleplay it.
Send me the
Oh,
link
okay.
if you
I'll
want.
send you the
Brendan.
link.
Yeah, role play it. No, I prefer you to role play it actually.
So the market cap is like $2.8 trillion.
I honestly
He's
could
like,
almost
oh,
roleplay
it goes to zero.
That was great.
That was pretty good. That was pretty accurate.
That's close, wasn't it? I just listened to it, so I know exactly what I'm saying. All right, where are you? Oh, I can put it in this chat, can't I? Of course I can. Yeah, that. Does that work?
I'll give that a
Yes,
go.
came through.
It is pretty funny. It is hilarious. Never gets old. I wonder why the audio didn't work. That was sad.
Hang on. I think we
Need
got it
audio.
this time.
Hopefully it's got audio. Yes.
There we go.
Market
We got
cap
audio.
is $2.168 trillion. And now the market. Oh! We went to zero!
Oh, God damn.
Oh, there we go. Squid Games. Motherfucker. Oh, good Lord.
Yes.
Right. We better stop that before we get demonetized anyway.
Oh,
Yeah.
Oh, went to zero.
And so was that within? It went live, and then within a couple of hours, that went down again, or
Yeah, it went from I'm not exactly sure when the coin was created, but all in the space of about 4 hours, it went from $38 in the 30s per coin. And then within 3 hours or 4 hours, it was at 2,400. So it was, many times higher. And then
Yeah, 68.
it just snapped to zero.
Crazy.
Which is, all in the space of like 4 or 5 hours, which is kind of crazy.
Busy day.
Yeah.
That's that reminds me of because I assume this is small amounts of money. Like there's no way there's hundreds of billions flowing into this to get that to $1 trillion market cap. It's got to be just super thin volumes. Like a couple of weeks ago, I got a few messages. I don't know if you guys saw this as well, but there was like one share of Berkshire A traded after hours, and it was like when you looked up the stock price, it said it was like $650,000 or something, up from 450. It's kind of insane what these really small volumes can do. And we actually saw it with I don't know if you guys are familiar with Racist Logistics. That's another like Monish, that's his Turkish real estate company. Same thing happened. So that's got like a US over-the-counter listing, and it like 10x'd in a day because someone, I don't know whether they just fat fingered it when they were putting an order in or quite what happened, but there was like a couple of $1,000s, I think, of volume traded, and it 10x'd the stock, and then it was down 90% or whatever again the next day.
The Ask the Dream Investor broke that down quite good on his podcast, I think, wasn't it?
Yeah.
He was talked about that. Yeah.
Yeah, I think he did. I mean, I was talking to Jason, Afternoon Investor, offline about that, and he's like, man, the numbers I'm staring at in my brokerage account right now are crazy, because he had a holding it.
Yeah.
Man, insane.
Yeah.
All right, let's take a few more questions. The other thing I was actually going to say on that Buffett cash position, we had a few comments around this. There might be a fair way back now, but out of the 150 billion, I don't think he can actually spend that much of it. I think maybe I've heard people like Chris Bloomstrand cover that quite extensively. Sort of thinks maybe about 70 billion is actually sort of investable by the time you account for the cash that sits in the utility companies and the railroads and cash they need to sit there for insurance operations and all that kind of stuff as well. So that's something to keep in mind.
Right.
I wouldn't mind having 70 bill to just splash on something.
Yeah, only 70 billion.
Just a lazy 70.
Yeah, we think he's got a lot of money, guys, but in fact, he only has 70 billion to spend.
It's chump change.
Yeah.
No, but you're right. You are right, Tom. That's a good point.
You guys see any questions you want to have a crack at?
I think there was one targeted at me and I think it was Brandon on our Tesla valuation by Galp Investor.
Hit me.
Oh, we're going to go there. Let's
There
let's
we
do
go.
it. Who was the comment?
Time for a toilet break.
I don't know.
I think
I
it was
don't know
Galp
about you,
Investor.
Taylor. But
Tell us
I follow-
about Tesla, guys.
I'm kind of in the camp now. I'm battling with it because it's obviously, for where the business is right now, it's just like the dumbest thing you've ever seen. And
Hey,
if you
Brandon,
wanted to,
Brandon,
yeah,
I got to. It's not just a car company, though.
it's not just a car. Damn right.
There you go.
Quiet, damn it. No, but like in all seriousness, like, and I kind of get crap on this all the time because they're like, oh, Brandon, you talk about Warren Buffett and then you buy Tesla and stuff like that. And I bought this back in 2017. Yeah. So, and back then, like, obviously, in hindsight, I wish I had just sunk everything I owned into it. But I actually bought it originally as kind of just a part of like the speculative side of my portfolio, just to see, because obviously I like the company. I know it. And I just wanted to back Elon Musk and what they're trying to do. And then, I always had the mentality that, you know what, maybe I'll lose this, I didn't think I would, but I was like, maybe it'll happen, but I'll just hold it for a very long period of time. I'll just back Elon Musk, And then obviously Tesla stock just went bananas. And I'm kind of now obviously now because it's gone up so much, it takes up quite a sizable part of my portfolio. But now I'm kind of battling because I talked to, I don't know if you guys ever have seen Galileo Russell. He kind of thinks a little bit differently with his investing, but he's big into Tesla. And like he's like the biggest Tesla bull around. Like I dropped a bit. Did I drop?
Yep,
it's
carry on.
Yeah.
Biggest Tesla bull around is what I
he's
heard.
biggest Tesla bull around. You know, we're holding it to flipping, 5 trillion or whatever. And now I'm talking to him, and he's like, "Man, Jesus, like, it's pretty darn expensive."
It's only 4
but
to
I'm
go.
also
Though.
sorry.
It's only 4 trillion to go.
No, but I'm also like, one of the biggest mistakes that I hear all of the investors that we look up to talking about is that they exit too soon, that they jump out too early. They just don't let their profits run for long enough. But now I'm looking at, I'm really battling, honestly. I'm really battling. I'm like, geez, I just don't know what to do. But interested to hear your thoughts, Taylor.
Yeah, well, I've just finished my economics degree, so my basis of not selling is just opportunity cost. Because I'm looking at such a small number invested, because I only got into investing almost 3 years ago. So mine's maybe 5 or 10,000. So if it goes to zero, or if I sell too early, that's not a big hit. It's like, I don't know, a quarter of a year's min wage or something saved. Whereas if it goes well, it's a house deposit for me, maybe. So the difference in risk to reward, the way I see it, is really valuable to me. But I missed the 2018 almost bankruptcy and all that, which would have been probably quite a hard area to hold Tesla through. So I got into it, I think, end of 2018 or end of 2019, actually, through a YouTube channel, Solving the Money Problem. And he makes daily videos just talking about Tesla and Elon Musk. And I watched that for 6 months. Yeah, good old Stephen. Then I got into Tesla Daily, Chicken Singapore Gang, and a bunch of other YouTubers, and then started doing a deep dive in the financials, the competitors, and the US financial markets, and then eventually saved up enough cash to start a position, initially through Hatch, because Sharesies didn't have US stocks at the time. Now I'm sitting around going, run out of cash and got to decide if I want to buy more or save up for a different investing opportunity.
Yeah,
well, your thoughts, you guys that aren't interested. I'm assuming, I don't know if there's a closet Tesla holder as well in the house, but I'm interested to hear what you guys think of it.
Actually, one comment to something that you said earlier, with a lot of investors say, "Oh, the biggest mistake I made was selling," and I think that's I certainly, when I speak about my investings and my mistakes that I made, that's certainly the case as well. And so I try to take a split approach. The majority of my portfolio is going into value investings, where I really think this is a safe investment, a safe place to put my money, because the biggest thing is that I really don't want to lose that money, because it's well earned. It took a while to build up, and I don't want to lose it. However, I love technology, and I love companies that have something special to offer. And while obviously Tesla's just amazing, and obviously one of the greatest examples, I've been only into Tesla for, I would call it a trade. No, I wouldn't even call it an investment. But other examples I have as well, where the selling obviously was the biggest mistake I did. And one is, I'm not sure if someone of you know Atlassian. It's actually an Australian company. They are listed on the New York Stock Exchange. And I started to use their product before they actually were a listed company. And so early on, I knew that this is just a product that just hooks you. It's just amazingly built. And for what the people that I use it, it's just perfect for them. So for programmers, or if you need a system that creates a workflow for whatever you do, it's just so adaptable for whatever you do. And so I started buying this relatively early, but I obviously thought, oh God, this went up crazy, because I think they went public at, I don't want to lie, but I think around $20. Now they are at $400. I had this investment early on, but I sold way too early. and then no, so certainly a thing. But obviously, again, those type of investments, you wouldn't want to put in too much money because it just also can go south. No?
Yeah. Yeah, it's interesting. There's got to be a point, surely, at which the price just gets so egregious that never sell makes no sense.
Yeah.
What do you guys think?
Well, personally, I'm like at that point now because I've just watched it. Like if people haven't been watching the chart, I'm just trying to bring it up. In the last month or something,
it's gone up like 70%.
It's gone up, 54% in the past month. This is.
I looked at it today because I saw the comment from
look at
Elon
that.
Musk, and
it's
beautiful. Whenever you see charts like that, you know what happens.
But yeah, that's crazy.
That was a good point you guys brought up about the Hertz on your guys' podcast recently, where you were discussing, I can't remember how many vehicles was it, or the 100,000 vehicles?
100,000, yep.
Yeah.
About 4.5
And then how much
billion.
was but then the market cap went up 100 billion, was it? Or I can't remember. Yeah, like, what?
Lots of that will be coming off Q3 earnings as well, though, because there was lots of good news there.
I think
it shows a sentiment for the future of Tesla as a company's buying 100,000 of their cars at max value, no discount, and no competitors can produce cars for other companies. So in the future, if more and more car rental companies come in, Tesla's going to be the one they'll want.
Yeah. I think the stock also got upgraded by someone. Not that actually matters, but it seems to shift the stock price on that day. And Hamish, you made a good point in the podcast as well, that you were saying that even though it's a dollar value, it's like the deal's worth $4.5-ish billion in revenue for them. I mean, there's a flow-on effect of that these are rental cars, so that people are going to come in and try them out, and that will surely lead to at least some eventual further sales. So maybe the deal's worth more than that, but yeah, when you're saying a $4.5 billion deal is worth 100 and something billion in market cap, you kind of like,
and all of the cars possibility for subscription on the driving, so it can become a subscription revenue as well.
Yeah. I mean, there's no denying they're a great business, and especially since 2018, when they were having quite a lot of trouble, they've progressed a long way in terms of what I would define as a great business, one with a good track record and other things. But yeah, I mean, the price is just, it's either extremely, a lot of people speculating on it, or people wanting to bet on them becoming, the greatest they could become, not just in the auto industry, but in energy and many other industries that they can move into, AI and that sort of thing. So, it's certainly, I really like the business, but from an investment perspective, I've just never really given it too much thought, I think.
I'm in the same boat, Hamish. I think that's a good way to
a few of the other YouTube investors I watch talk about Tesla currently with its 250 forward PE or something, as Amazon back a few years ago. And obviously you would have loved to buy Amazon then. It's very speculative and a big regret on a lot of investors, and that's what Tesla may turn into, depending on your own valuations and how you look at it.
You probably also have to look at the market cap at that time from Amazon.
Yeah,
which probably was a little bit smaller.
Yeah.
Oh, Brandon. $5. What's your heaviest Atlas stone? Do you guys want to have a guess?
Good question.
Do you guys actually know what an Atlas stone is, or is this just Brandon? So it's basically, it's more or less like a big concrete ball, which in strongman you have to pick it up off the ground and load it onto a 1.2 meter high platform.
Okay.
So yeah, the heaviest one that my gym has a few. It's interesting because it's not like powerlifting or weightlifting where you can just add a little 1.25 kilo plate to the bar each week and add a little bit at a time. It's no, the gym has 5 stones and they're all 30 kilos apart in weight. So it's just jump to that next one.
Wow.
Wow.
So yeah, the heaviest one my gym has is 150 kilos, and I've done that for a set of 3 before, I think. Yeah, set of 3.
3 overhead press.
Not overhead press.
Jeez.
I wish.
Just head to Meraki boulders and you'll be sweet.
Yeah, single arm
Yeah.
overhead press. I like that.
Yeah, don't
How's
think
your
I
lower
could do
back?
that anymore.
How's your lower back after picking one of those 150s up?
Well,
That'd be insane.
Yeah,
Oh, what?
it's fine. Like it sounds like a lot of weight, but compared to like a deadlift, like my best deadlift is 280 kilos. So compared to that, it's you can kind of handle getting in slightly awkward positions, you know.
Yeah, right.
But I don't even know if I could do that at the moment after being in lockdown for a while now and haven't been able to pick anything up. So
No
it'll come
training.
back. Yeah.
How do you train for that? Do you just pick up heavy stuff all the time and that builds it up, or what do you do there? Like, is there a set sort of routine you got to follow?
Yeah, well, before I did any strongman stuff, I competed in powerlifting for like 4 years. So the main events there, or the events there are squat, bench press, and deadlift. So I was basically training those core lifts at least 2 times a week for each of them for 6 years, probably, with a bunch of work kind of in and around that, and then transition across to strongman, which there's a decent amount of carryover. The main thing is just to kind of get used to the events because everything's so awkward. Like you're picking up, these concrete balls or like overhead pressing, like, log shaped things, and or like you're doing,
how do you grab
or you
it?
just like for the Atlas Stone.
Yeah, like is there a handhold or what do you do? Just grab it?
No, you just wrap your hands around it, but you are allowed to use like a tacky resin kind of thing. So you can put that on your hands and forearms and then kind of stick to it a little bit better. It's pretty painful, like peeling your arm off, but
it's like there's a certain technique to it though, right? Because you have to have it like you start with it between your legs, right? And you get your hands under it and then you grab it with your legs as well, don't you? And then you like roll it up into your lap and then you try and like lift up like that. Is that right?
Yeah, that was pretty close. Yeah.
Can you show us?
It's not like you're just like flipping. You're not just like. It's like you use your whole body, not just your arms, to lift it, right?
Yeah, you basically kind of deadlift it off the floor to get it to like your lap, and then you can kind of sit down and have it sit on your thighs, and then you can kind of get over top of it and like stand up and extend out,
right,
to get it on there. But
maybe you start a channel where you just do some outdoor video shots explaining how you do those exercises.
Yeah.
Well, I tell you
I'd love
what,
to see it. I have no idea about how that works. And
Neither.
I tell you what, if anyone can dig through the dark depths of YouTube for long enough, you may or may not find some old powerlifting training footage from myself.
Bam. Here we go.
How big of a super chat do we need for you to show that on the stream right now?
What are we talking?
Yeah, I think people have to donate.
I don't think that's actually too hard to find, to be perfectly honest.
Okay.
Someone will find it for us.
Someone will find it. Rightio. Should we get back to some investing questions?
No, I like talking about Atlas. So Tom,
Brandon starts a channel, New Muscles.
Oh dear. Oh gosh. Do we have any more questions?
Yeah, what do we got? I've lost it, but we had one on favorite investing books before.
We now all have a new favorite investment book, I guess.
Books. What, Intelligent Investor, or is that with it?
No, Richer, Wiser, Happier. I was like, that's not working. Yeah, Richer, Wiser, Happier. I think it's just first of all, it's such a easy read and just so interesting to listen to their stories. No? And obviously he's a writer from nature, and a lot of the people that make investment books, they are obviously investors and they just want to share what they did. But obviously, Richer, Wiser, Happier is just so well written, and it's just basically you listen to good stories. No?
Yeah.
Yeah.
And chapter 1's Motive for Bryce, so you launch straight into it, which is pretty good.
Yeah.
So it's easy
Comes
to get
in hot
into
with several F-bombs and all sorts.
Yeah, I was reading that. I was like, wow, I didn't take Monish to be like that. That's interesting.
Really nice interview, by the way, Tom, that you did on your podcast. Yeah, no, you are actually doing very well with your question, how you spoke with him. So everyone who has not listened to it,
Yeah,
Definitely
I
worth
appreciate it. That's probably the least talking I've ever done on podcast, I reckon. I sort of just
That's a good
got
job.
halfway through a
That's the
question and he
idea.
was off for 20 minutes. So that's good.
I mean, he has done that a couple of times, though. No, so
Yeah, no, that was a fun interview. Any other book recommendations? Anyone else been reading something interesting lately?
I'm a beginner, so I've only read one
Taylor's got
investing
Rich Dad
book,
Poor
and
Dad.
that's it. That's
Hey,
my
there
start.
it is.
Nice.
I've got
No,
4
that
Hour
was-
Work Week as well.
That's a
Don't
good
know who
book.
it's
Yep.
by, but I'm getting a start on that, and I'll probably head towards Monish Prabhaya and their autobiographies and stuff like that, and get into your guys' level.
I
The
just
Down
finished.
Dip is awesome.
I just finished Peter Thiel 0 to 1, which is kind of
That's very good.
good. It has certainly good parts in it. Some areas are just really focused on startups in general, and probably focused towards people that want to start a company. But it's just interesting his thoughts around the competitive advantages to just that you have, and he talks about the large companies and how they advertise themselves as a monopolist or not, and so that's
Pabrai-
certainly a good book.
Yeah, Pabrai actually talked about that in his latest interview, I think, or one of the recent ones. He talked about that quite a bit. Like, companies that are monopolies say, Facebook or Google will say, no, we've got a small market share in advertising, whereas in reality they're in a monopoly in search and all that stuff. And then you've got all the companies that aren't monopolies trying to convince you that they are.
Yeah, that was funny.
I've been reading. I think the biography of the Texas Roadhouse founder, but I feel like that's a unique interest to me. But it is a really good book. I think biographies or autobiographies from founders is probably one of, or even just like a documentary, for example, is probably where I find myself reading the most. Or reading or watching, for example. So yeah, and then not a book, but the Nick Sleep letters I've been working through slowly as well. A lot of value there, I think.
That's letters when he wrote when he was running his investment firm, or
yes,
or was he doing that before and after?
Yeah, so during while he was running the firm from I think 2002 or 1 until 2014, so he did one every 6 months, and they read very much like Berkshire letters, diving deep into principles, even more so than Buffett did. I mean, he goes into the specifics of what discount rate he's using in his valuation and why, and I think there's just a lot of value there for people who want to kind of expand their understanding on kind of Buffett style, or a modern twist, I guess, on Buffett style investing, focused on kind of compounders, I guess is what Monish would call them.
Yeah, Hamish, I wanted to go back to what you were saying before about reading the autobiography, or is it an autobiography, the Texas Roadhouse?
It is,
yeah. And I agree that, like, while you can read investing books just to kind of get a gauge of the strategies and that sort of thing, when you actually find a business that kind of hits those strategies, normally you can find a book or two actually about that business specifically, which I found really. I remember, Tom, you put me onto the Alibaba book by Duncan Clark, which like really helped, because I was with Alibaba, I was starting at zero. I was like, what the hell is Alibaba? People call it like Amazon, but it's Chinese. So getting onto that, that was super helpful to actually get up to speed on how the business works. And like, for example, when I was looking a while ago back into Disney, one like resource that helped me understand how their theme park business worked was a Disney Plus Netflix series. Lol, was a Disney Plus series which was talking about the history of their theme parks and how each one, because you see it all these different resorts in like the annual letters, and you're like, okay, they've got a bunch of resorts, but watching a show like that actually gives you the context of like, okay, this is the oldest one, and then it comes up and what the new ones are and where they're expanding to and that sort of thing. So I find that you can definitely find just like the average, the standard kind of set of investing books, which gives you that good framework, but you can actually really find some good individual company related material to go deeper. I don't know if you guys have found similar stuff with any companies that you've looked at in the past.
Yeah, I'm less of a book person, so I use YouTube and visual and Audible aid. So most of mine is just searching on YouTube for company-specific videos, which is how I found Steven and stuff.
Yeah, true. Actually, there's a lot of good stuff on YouTube. There's 6 really good YouTubers that I'm thinking of just off the top of my head.
Rest in peace, Andrew Brown.
Yeah, he
could have been the 7.
He's off on his holiday. He's not sticking around. He's not
I've read the
1 hour 5 minutes deep.
I've read the book from Phil Knight about Nike, which was pretty good. Lots of history though, but it's just amazing to hear how that company has developed and yeah. Again, he's talking a lot about how it all started, but still, it's just amazing. It makes you appreciate what the company is today, and certainly comes back to what Bren was saying, that you get a much better idea about what the company is about and a deep background. Yes.
Here it is.
So I haven't read it.
No, but again, while you were grabbing it, I was saying that it certainly describes exactly what you were saying. No? That you read the book and you know what the company is, and you actually know the history and what they're all about.
Yeah. Very helpful. Yeah. I do need to read that one,
excuse me. That's exactly what I was hoping to get out of the Texas Roadhouse autobiography, was just a deeper understanding of how that business started and what worked, what didn't work in that particular case. So yeah, and he talks, in the book a lot about that. So, I think reading those kinds of books can give you, you get a lot of history, but maybe also some insights into what things worked well in that particular industry.
Yep.
Mm-hmm. Yeah, for sure. All right, shall we take one more question?
Sure.
Mm-hmm. All right, this is an interesting one. I say one more question, but there could be some long answers to this, but we'll see how we go. Question from Jeremy. Since temperament is so important to investing, what practical things can be done to improve temperament? That's something I've pondered as well. Do you think good temperament for long-term investing is something you're born with, or do you think it can be learned over time? Any takers on that one?
I think it could be learned.
I think it probably could be learned, yeah.
Yeah, well, I'm just thinking about how I've gone through my investing journey, and I definitely didn't have a good investing temperament when I started, but I like to think that I've got a fairly good investing temperament now. But yeah, I'm just trying to think of what are some practical things. Unfortunately, I think it probably does come down to a bit of experience. I'm not saying that I'm a very experienced investor. Like, I'm obviously still quite young, but just having had stock market experiences that you learn from, which is probably not helpful to somebody that's maybe just getting started. But I don't know. Do you guys think of any practical things? I think reading a lot of books from people you admire really kind of, for me anyway, drilled it into my brain. It's like when you start reading books from multiple different top investors and they're all kind of saying the same thing in their own way, then you're like, okay, maybe there's something to this. So, when Peter Lynch talks about the psychological flaws of people investing, and then Benjamin Graham's talking about Mr. Market, and Monish Pabrayal's talk about, margin of safety and being patient, you kind of just go, okay, maybe there's something to this. Maybe I need to realize that long-term investing is the way I need to go and not getting caught up or something. I don't know. I'm just trying to think of some things that have helped me.
I actually agree with hearing the same thing over and over again and really drilling it in your head. That certainly helped me. So I was really started out very naive about investing, and when you read more and when you obviously get into an idea of how you want to invest, and if you kind of found your way, you still have to find ways to remind yourself about it. And obviously, the easiest thing that everyone knows is that, like even put little post-it notes on your monitor with things that you want to be reminded of, and other things as well. If you have one person that you admire, try to listen to as many things that he says, because those people repeat themselves as well. For example, there is Sven Carlisle, the YouTuber, and he has I don't know, 5 things he talks about all the time, right? And it's all about drilling those things in your head. While he's on his videos sometimes controversial, I think there are obviously a couple of really good things that he's saying, and it's about always the same thing, and trying to just stick to that, and don't go and take another route, and try to be on your path.
Solid.
Yeah.
There's a really
I'm
good
not
book.
sure if...
Sorry.
Go ahead.
Oh no, there's, while we're on books, there's a really good book called The Psychology of Money by Morgan Hassell, which sort of goes into the psychology of money. It says it in the title. But it's a super easy book to read, and I highly recommend it, especially if you want to sort of develop your temperament when it comes to investing a little bit. Has some fantastic examples through the book as well. One of them, I can't quite remember the guy's name, but it's you guys are probably familiar with the story, where he was like a janitor and a mechanic in America, just slowly squirreled away. I think it's something Reed or something, like last name Reed. Over his life, he just squirreled away about $8 million, just compounding over his entire life, just bought into good companies, didn't sell them, and just kept doing that. And then he eventually died.
Ronald Reed.
Ronald Reed. There it is, Ronald Reed. I was trying to remember the name. But that was just one of the many examples in the book. But it's a really good book that sort of goes into the mindset of investing, which other books sort of touch on it a bit, but that one's purely on that.
Yeah, I'm not sure if there's anything too much I could add. I kind of like to go through and try and read at least snippets of annual reports over maybe like 20 or 30 years for like a really great company. And I think just doing that and just reading kind of what affected the business in any given year and how the business transformed, what acquisitions they made, you can really start to appreciate what a great business is over the long term. It's a business that goes through so many painful short-term patches a lot of the time. And I think just reading back to back, not even a lot, maybe 3-4 paragraphs or 2 pages, let's say, of each annual report for 30 years straight, back to back, you can basically kind of really step back from a business and view it, for what it should be, which is if you're investing in it, you're going to hold it for the long term. And that during that time, there's going to be unforeseen things that happen that affect it in the short term. So I don't know, that's kind of something I do. That gives me a little bit more confidence, I guess, when I'm looking at a business that's facing a short-term problem. I can look back, and often that same short-term problem has happened to that business multiple times over their history, if it's got a long history. And that kind of reassures you a little bit, I think, and maybe helps you have a little bit better temperament. But yeah, I'm not too sure what other kind of practices you could put into place to help that.
What I like to do for myself is just doing some of the math and the numbers yourself, whether it's delivery expectations for Tesla or intrinsic valuations. Doing the valuation yourself with your own margin of safety, strategy, expectations, and then aligning it with your short and long-term goals really helps me set what I want to buy and sell and when and how I'm going to do that. And that's what keeps me sane.
It's a good point. Yeah.
Nice, mate.
Yeah, agreed. There's a couple of things that I do. I echo like everything all you guys have said, but I'll add a couple of things. I think there are some like structural things you can put in place, sort of day-to-day temperament aside. I think if you're watching us, probably a lot of these are going to be no-brainers anyway, but it's stuff like don't short, don't invest on margin, don't invest money you need in the next probably 5+ years, just basic stuff like that. And that can allow you to act a lot more rationally. And one of the things, I've only added this very recently, so I haven't actually had a chance to use it very much, but it'll be an interesting experiment, is developing an investing checklist as well before I buy or sell anything, just to make sure, even if a company doesn't meet 100 out of 100 points on the checklist, it at least make sure that I think through each of the questions that I want to make sure I mentally process before I make an investment. And then I go on about it all the time, but the whole sort of punch card analogy has always worked well for me. Like if I can find 1 or 2 new investments a year, I'm done. So that takes a lot of pressure off too.
Nice.
Cool. All right, boys, should we wrap it up? This was fun. After we got through,
yeah, that's awesome.
I'll go for Taylor.
Taylor's got some.
Yeah. Back on that repetition thing Michael was talking about at the start, I think Brandon will agree with me, where Stephen from Solving the Money Problem really just drills the same things about Tesla every day, to the point where I no longer watch the channel that much, but still agree with what he's saying. So that was really helpful for me and kind of, I guess, convincing me in the buying of Tesla stock.
Yeah, I like it. I've even seen people comment on Warren Buffett videos being like, this guy just says the same thing every time. Turns out it works.
Yeah.
For 50 years.
That's the beauty of it.
Yeah, that's the idea.
Yeah.
All right. Let's wrap it up there, guys. I appreciate you all coming on, and both yourselves and the people watching being patient with my terrible internet. I'm sure I'll do better next week. We'll see. So for anyone watching, this part of the Margin of Safety team will be back on in 2 weeks' time. Next week, we're bringing in Team America plus John, I think, is going to be the plan. So be sure to tune in for that. Like I said at the start, if you want to contribute to the Movember campaign, link is in the description to that. And we'll also have YouTube channel links for all 6 of us, plus Andrew as well. So if you want to go check out any of the respective YouTube channels on here, if you haven't already, feel free to go and do that. But great talking with you guys, and we'll have to do this again in a couple of weeks.
Tom. Thanks for having us.
Thanks for having us, Tom.
Cheers.
Cheers, guys.